I want to start with a question. I've asked it before, but I want to ask it again. And the question is this. I want you to answer it honestly, not for me, but for yourself. For yourself. How confident are you right now that your portfolio is built for what comes next? Not what just happened, not the last 5 years, not the last 10 years, but what comes next? Because here's what I know. The majority of investors living today have never experienced the end of a secular bull market. They've never felt what it's like when the market doesn't just dip, it restructures. When the companies everyone believed in become the companies everyone is fleeing. So I want to spend the next 20 minutes showing you exactly where we are in that cycle, not to frighten you, but to prepare you. And I've talked about this before, and I'm going to continue to talk about it for the next several years because I believe it is going to last several years. And now is the time to understand what's going on and where we are. By the time we're done today, I'm going to show you a company. I'm going to show a company, a real one, a boring one, that tripled in value during one of the worst market crashes in history. While the NASDAQ lost 80% of its value, I'll tell you exactly what the Cooper Tire of 2026 look like and where I'm finding them right now. But first, let me show you something that you may read and I share about, and which you're probably not hearing in the press right now. There's a quote. I want you to read this. Sir John Templeton, one of the great investors of the 20th century, said this: bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and they die on euphoria. Let me say that again. Let's read it again. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. And I believe we're living inside the last word of that sentence. We're living in a euphoric world. How do you feel about that right now? I'm going to share this quote again and again and again because I believe it. Where do you think we are in this whole process? Because that's where I think we are. Let me explain why I think that's true. It comes out of history. History doesn't repeat, but it rhymes. And there have been three great secular bull markets in modern American history. Not rallies, not recoveries, but multi-decades where the market has climbed and reshaped an entire generation of wealth. 3 times. The first one began in 1941, came out of the ruins of the Depression. There was a generation that watched the market destroy their parents, and that generation wanted nothing to do with stocks. The pessimism was the birth. 25 years followed. That secular bull market went from 1941 to 1966, before the secular bear market started. The second was born in 1979. It came out of stagflation, 18% mortgage rates, a Dow that had gone nowhere for 16 years. The Dow reached 1,000 in 1966, and by 1982, it was still at 1,000. By 1979, the Dow had fallen from 1,000 in 1966 to 790. It had been up and down, never passed 1,000, and in 1979, it hit 790. Nobody wanted equities. Maybe the most famous magazine cover of the time was the 1979 cover of a Business Week proclaiming the death of equities. 40 years ago, one of the most infamous features ever written about the stock market, titled The Death of Equities. Magazine's cover featured a photograph of a crumpled stock certificate looking like a dirty old shirt ready for the trash can. It was shocking, to say the least, and probably put fear in the hearts and minds of every investor at the time. For better or worse, the article went on, the U.S. economy probably has to regard the death of equities as a near permanent condition. Near permanent condition. Reversible maybe someday, but not soon. That was actually the birth of 21 years of extraordinary growth, because the market went from 790 to over 11,000 by the Dow. The third cycle, born in 2009, following something that most of us have experienced, the Great Recession, a wreckage of the financial crisis, a time in which people were concerned that the financial system would collapse. Cover of every magazine said that the system was finished. That was the birth of the third great secular bull market. And here we are, 17 years later, watching what I believe is the final act. History doesn't repeat, but it rhymes. And the things I'm hearing right now are the same things I've heard before. The specific things people saying about the market, the emotions underneath them, they sound so familiar. Greenspan didn't call it euphoria, as Templeton did. Greenspan called it irrational exuberance. And he was right. He was just 3 years early. He talked about irrational exuberance in the market in December 1996. He was 3 years early. The euphoria that followed, the real euphoria, ran from late 1997 all the way to March of 2000, when the NASDAQ went from 1,500 to 5,000. And the rallying cry, the thing that people feel they could not possibly lose, was this: brick and mortar's dead. Brick and mortar's dead. The internet changes everything. That was the cry of euphoria. Does that sound like familiar to you? Something today? Technology is different. But aren't we hearing the same thing about artificial intelligence? Isn't that the same thing? It's changing everything. It's eliminating jobs. It's increasing productivity. It's doing so many things. Just as brick and mortar is dead and the internet changes everything, aren't we hearing the same thing today about AI? Aren't we hearing it? So I have to be honest about the whole thing. I have to be honest about where I was in 1999, because I've been around a long time. I lived through a lot of these markets, and I think it matters for what I'm about to tell you. I never lived through a period of irrational exuberance. I never lived through that euphoric time. I was watching it. I was studying it. I was worried about it. Worried like I am today. And I was doing something about it. I was positioning my clients for what I believed was coming. You know, I missed the euphoria because I was so concerned about what was going on in the irrationality that I ran for cover. And in 1999, when the Dow was up 44%, my clients were up 4%. I missed almost all of that irrational exuberance. 1998, I was closer, but by 1999, I had missed a big portion of it. You know, I never lived through it. I believed what was coming, and it turned out to be true. And what happened is, when the market collapsed in 2000, March of 2000, my clients were up 38% when everybody else was down. When the NASDAQ fell 80%, my clients were up 38% in 2000, and they were up 28% in 2001. You know, I've been preparing for it. But I missed the irrational exuberance. You know, I don't just talk about my clients being up because I want to tell you, and maybe you can think about it. If you've lived through 2000 and 2002, what did it feel like to you? Or has it been too long ago? Has it been too long ago? I'm more experienced now, but that also tells me, having lived through it, I'm preparing for it. Which brings me to the Cooper Tire story. Cooper Tire. Let me tell you about Cooper Tire. I was buying Cooper Tire in 1999, and Cooper Tire was doing nothing. From 1989 to 1999, for a period of 10 years, their revenues tripled, their earnings tripled, and their stock price looked like the EKG of a dead person, dead flat. Same price of the stock in 1999 as it was in 1989. It was boring. Everyone was looking at tech, at the internet, the promise of digital everything. Tire company was boring. It was old economy. It was the information highway people were going to take, not the pavement and the rush hour traffic. And the NASDAQ, when it began falling down 80% from the peak to the trough, the S&P cratered, the Dow cratered, and Cooper Tire tripled. This is the principle. This is the principle that happens, and this is the preparation happening. When markets go irrational in one direction, they create profound mispricing in the others. Companies with real earnings, real revenues, real balance sheets get abandoned. They don't go up. They just quietly wait. And when the money finally has nowhere else to go, it finds them. Maybe you can think of a company today that sounds like a Cooper Tire. There are some around. There are. And some of those companies are not only going to participate in this irrational exuberance, they're going to participate when the market hits a period of stagflation, which I believe it's going to happen. During these times, it creates opportunity. Not hiding, not waiting on the sidelines, but finding things the market has overlooked, finding things that the market doesn't see. And I want to be clear about something. Today's workshop is the map. What we covered today is the big picture, where we are in the cycle, what history says comes next. And over the coming weeks and months, I'm going to dig deeper into this, because each factor that has historically brought a secular bull market to an end, the valuation extremes, the sentiment shifts, the policy changes, the debt dynamics, we're going to examine one by one. We're going to look at all of those over the next months. We're going to talk about what's happening. We're going to talk about the impact of why that happens. So if this resonates with you, stay close and subscribe. If you're seeing this as a podcast, subscribe to the podcast, because there's so much to happen. If you're seeing it live, keep following it, because every Thursday I'm going to be here talking about what's going on. Every Thursday. And if you miss the Thursdays, you can find the podcast. And I'm sure that Chris is going to post that in the chat. Copy that. And if you miss some of these, pick them up in the chat. Because the plan going forward, what I'm doing differently this time, I'm making 3 moves. I want to participate in the late stage. I'm not hiding from euphoria. I did in 1998 and 1999. I could see what was coming, and I hid from the euphoria. I was afraid to get caught in it. And I wasn't the only one who saw it coming. So many people saw it coming. So many people said it was irrational, but they participated and they got burned. The irrational phase produces real returns. And I want to capture some of those. I was wrong about the timing before. I don't want to be wrong about the timing this time. And yes, I want to be prepared for what comes afterwards. So I want to build positions for the turn. The Cooper tires of 2026 exist now and will exist during the next few years. Clean balance sheets, triple revenues and earnings, stocks that have gone nowhere because everyone's looking at something shinier. I want to find them. And that's what I'm doing. And that's what I'm building. And some of those stocks aren't yet in client portfolios, but they will be. And the third thing is I want to be honest about what I don't know. Nobody knows when this ends. Nobody has a crystal ball. Greenspan called it in 1996 and watched 3 more years of euphoria before he was proven right. What I know is that every secular bull market in history has ended, and the investors positioned for the ending didn't just survive, they thrived. I don't know when this will end. Are you ready for it? That's the big question. The data says we're in the euphoria stage. The sentiment survey says it. The valuations say it. Doesn't mean the market crashes tomorrow. It means the risk profile has changed. And it means the window to act calmly, deliberately, without panic is open right now. But it won't always be. Won't always be. So really, you have 3 choices. And I'm making an invitation for you to act right now. You have a choice. You can do nothing. You can hope that this time is really different and that this secular bull market is not going to end, even though it has in the past. You can do nothing. The second thing, you can wait and decide to react after you see the market move. When you can see that there's a crash coming, and the chances are you won't see it because nobody does. Be honest right now. Are you doing nothing? Are you waiting and reacting? Or 3, you can prepare now. Calmly, deliberately, participate in the upside. Protect against the downside. Position the companies that the market's left behind or will leave behind. I've watched 2 of these cycles now. I've watched the cycles, and I know I've watched people who were ready and the people who weren't. The difference was never intelligence. It was never income. The difference was preparation, made while there was still time to make it calmly. And if you felt a flicker of recognition during this workshop and you're not a client, the client thought that maybe your portfolio hasn't been built with what comes next. To my clients, I can assure you we are building for what comes next. We want to participate in the upside. We want to be prepared for the downside. But if you're not one of my clients, let's have a conversation, 30 minutes. I'll look at where you are and I'll tell you honestly what I see. Good, bad, somewhere in between. No pitch, just honesty. And whether we do business or we don't do business, I think you'll come away with a better understanding of where you are and how prepared you are for the euphoric stage and for the secular bear market that's coming. The coming weeks are the territory. Valuation extreme, sentiment shifts, policy changes. All those things are going on. And some of what's going on is going to be a quiet, slow death of wealth. It's going to be a slight, both erosion of wealth. And I'm going to be talking about that next week. But right now, if any of this makes sense and you're not a client, go in and sign up for a 30-minute discussion of where you are and where my thoughts are. I think it will be valuable whether we do business or don't do business. Just 30 minutes, just a description of where you are. And with that, take time and think about where you are. And back to that original question. How confident are you right now that your portfolio is built for what comes next? Not what just happened, not the last 5 years, not the last 10 years, but what's coming next? How confident are you? And if you're not really confident and you're not a client, make a decision to do a 30-minute conversation.